Good morning and welcome to the Axis Securities Market Minute podcast. My name is Akshay Chinchalkar and today is Thursday, 16th January and the time is 7:30 a.m. US stocks gained the most since the day after election day as a cooling off in the December CPI increased expectations that the Fed's efforts to contain inflation are working and that a rate cut could come before September. The S&P 500 jumped 1.8% while the Nasdaq 100 outperformed with a gain of 2.2%. As data showed that core CPI rose 0.2% after rising 0.3% for 4 straight months. That saw the 10-year yield tumble by 15 basis points, while the VIX sank to 16, registering its largest absolute drop since 20th December. In other movers, the dollar index fell for the second straight day but recovered most of its losses by the close. Bitcoin hit $100,000 yet again. Gold rallied to the highest in a month as a smaller uptick in US inflation boosted prices, while NYMEX crude rose past $80 a barrel as the International Energy Agency warned that US sanctions on Russian crude would significantly impact supply. At home, the rupee finally saw some respite as it gained the most in 7 months, settling 0.3% higher at 86.32. A weaker dollar ahead of CPI and a better than expected trade deficit number at $21.9 billion did the trick for the domestic currency. Talking stocks, the Nifty had a choppy session that saw it swing between gains and losses several times in the day, but it finally finished 0.2% up. The India VIX ended 0.21 points down. Yesterday's scandal had a relatively long lower shadow following Tuesday's long upper shadow, which is a sign of growing optimism. Speaking sectors, 6 of them rose, with Realty rallying the most at 1.4% and Media faring the worst as it dropped a similar amount. Trent was the best performer on the day at 3.7%, while Mahindra & Mahindra dropped the most at 2.9%. Breadth for the Nifty was nearly an equal split. Technically speaking, resistance in the 23,355 to 23,500 area is the immediate hurdle on the upside, while supports have moved higher into the 23,048 to 23,106 zone. Our prop oscillators remain bearish, but the dailies are deeply oversold, while the weeklies are near oversold. On to flows, and provisional data showed that foreigners withdrew over 4,500 crores on Wednesday. Speaking derivatives, in the Nifty put call ratio dropped to 0.82 from 0.86, while the Bank Nifties was flat at 0.59. More than 4 calls were added relative to each put added, and implied volatility dropped over 110 basis points, which means that on a net basis, market participants have sold calls expecting resistance to show up. The FII index futures long-short ratio went slightly up from 0.2 to 0.21. Looking at options concentration for the weekly contract that expires today, the trackable range remains 23,000 to 23,500, with notable open interest additions seen at the 23,300 call strike and the 23,100 put strikes. Meanwhile, volatility became cheaper across the curve compared with Tuesday, but the supply of calls exceeded that of puts. This means that vol traders at yesterday's close were expecting the market's recovery to struggle, but with US stocks jumping post the CPI data, we will have to see if the sentiment changes at the opening bell today. Talking positioning via net activity in index options, foreigners and prop traders were bullish while retail was bearish. Looking forward, the GIFT Nifty was up 140 points. Asian equities were all green, but there was no notable jump. Talking stocks, Indian Hotels and HBL Power were at horizontal support, while Concor and KPR Mills were at horizontal resistance. BEML and Chalet Hotels were at trendline support, while Engineers India and Suzlon were at trendline resistance. Talking key moving averages for the NSE 500, 16% of stocks were above their 50 and 100-day averages, while about 30% were above their 200-day average. Initial jobless claims and retail sales numbers are due from the US later today. That's a wrap on the day's podcast. Have a nice Thursday and we will talk to you tomorrow. Goodbye.